What up, traders? So I'm going to get straight into it. If I do mess up on my words, it's because this is going to be mostly a raw video. So if I do mess up, I apologize in advance. I'm going to try to keep it as simple as possible. That way you guys can just learn about the strategy. So I use technical analysis and I also use price action to determine how I'm going to get into my trade. So I typically look for 2-to-1 to 3-to-1 risk reward setups, and basically I'm really simple. So let's get into it. I'm starting off on the daily time frame. I pull out my line charts. So line charts just basically tells me where support and resistance is, right, or zones. And it's really simple. There's less noise. So I'm going to go ahead and find a support area that's closest to most recent times. So right here, you can kind of see an area of interest. Basically price comes down to this area multiple times. So right here, right here, right here, a lot of consolidation right there. So I look for 3 bounces on a support, and that's a confirmation. And then let's go ahead and find resistance areas, right? So right here, I see more areas where price is interested in this zone. So I'm going to go ahead and mark that as well. So we have bounce right here, multiple bounces, right? Another one right here, and we're good to go. And so now I want to find another area of interest above for the breakout, right? So if price breaks to the upside, we want to look for a take profit area. So I'm going to go ahead and mark this area right here, and we have 1 and we have 2. Okay, so now that we have our zones created, we can get more granular and go to the 4-hour time frame, right? So I'm going to go ahead and hit the 4-hour time frame, and now we can go into the candlesticks. So the candlesticks gives us more data, and now we can really look for opportunities to get into setups, right? Again, you want to look for the 1-to-2 or the 1-to-3 risk reward setups. In this case, we're right in the middle of a channel. Well, we're towards the top of this area. And so if it hits this area, it consolidates, we can look for a sell-off. If it breaks, we got to wait for the retest and then a buy. But as you can see, you see a black line, and this indicator is the 50 EMA, right? Exponential moving average. And how I determine where price is going is overall based off of this dynamic display, right? So I'm going to show you an example. Price is bullish when it's over the 50 EMA. So you can see that price is hanging out over the 50 EMA, which means the price is overall bullish, right? So higher highs, higher lows. But then price actually broke under the 50 EMA and stayed under, and now we have overall a bullish movement to the downside, right? So it didn't become bullish until right around here, because we see a huge break. So this was the break right here. It retested on that 50 EMA, and essentially it's been bullish ever since, right? Except for right here, which was kind of a fake out. But this gives you a better idea of the overall direction of where price is, because again, if we're looking at price action to determine our TPs, our take profits, then we need another confirmation to be more confident that price is going to be bullish. So in this case, price is above the 50 EMA, right? And so we're going to be overall bullish. We also see higher highs and higher lows forming on this small little bullish trend, right? So if price comes down to this area, that just means price is most likely going to bounce on this 50 EMA, where I can take it up to this take profit area, right? Because price came up to this area of interest, and that's good. But we're right in the middle of the channel, and so the risk reward setup isn't necessarily the best, because price can do one of 2 things. It can go up here based off of tendency, based off of trend, based off of the EMA, but it could also go down this way. So you never want to trade within the middle of a channel. In this case, it's not necessarily in the middle, but you don't want to trade inside of a channel. You want price to break outside of a channel, retest, right? So basically coming back down to this area, right? And then consolidate. We want to wait for a little bit of consolidation and then a continuation to the upside. So let me show you an example, and we can go to most recent times. Let's look for a break and retest. So right here, okay. So this is a perfect example because we see that the 50 EMA is above where price is. So that means price is overall bearish. Then we see a big break to the downside that blows past this zone, right? So price came all the way down here. It retested and then it continued down. So in order for us to get a little bit more information, we need to get on the smaller time frames, right? Now that we have the overall direction, we can get more granular and start looking for patterns, right? And what I mean by patterns is we want to start looking for, bullish engulfings, bearish engulfings, rally-based rallies, drop-based drops, things like that. So let's go back into this area where there's that break and retest, okay? And you can see that there's more information. So even though price came all the way down here and then retested, look at there's much more information. So I'm going to show you a few things that basically give me more confirmations. So there is the essential break and retest where price breaks a key level, right? Retests, and this is the area where we should get into that buy, right? There's also the, let's go ahead and move this over a little bit. We also have the drop-based rally, so it looks like a V. So basically there is a sharp reversal and strong bullish candles that are showing. And then the same thing for the bearish, right? So we have a rally-based drop, basically looks like an A without the middle thing. And then we have the drop-based drop and the rally-based rally, right? The other thing that I want to show you is basically the bearish engulfing patterns and the bullish engulfing patterns, right? So these are areas where price can essentially reverse, right? So based on where price is, right? If we're looking for a break and retest, right, then we want to go to the beginning and look for a candle that confirms that price is going to continue to the upside, right? Because break and retest is a continuation pattern. So in this case, let's go to the where the break is, and we see that price broke, came up pretty far and went all the way up here, but price actually closed right here. So this is only exhaustion. And then we see, right, let's get a little bit more granular. Let me delete this. And you're gonna see that price engulfed. So this red candle is significantly bigger than this candle right here. So this was the first break and retest. So this was the break, this was the retest, and then this red candle formed. So I would have got into a sell right here for that short position, okay? And this would have been a really good setup because the risk reward setup is great. So if I put my stop loss above this wick right here, right? So this wick, and then I took price down to the to the next zone. Let's go ahead and find that as well, right? We're looking at a 1 to 4.3. So if you risk $1,000, you would have made $4,300 on this, right? So price did come back up to this area of interest, basically the zone, and tested again. But again, as you can see, my stop loss is above this wick, right? This area of exhaustion. So now we have another confirmation. We have, let's go back to the daily time frame, right? So we have basically the price is below the EMA, right, on the daily time frame. We have essentially a break and retest right here. We can see that playing out. And then we have 3 zones that we drew up on that daily and 4 hour. So we understand the overall picture is bearish, right, in this area where we hypothetically got into this trade. And so now let's go ahead and get more granular on that 4 hour, right? And let's go back to where price is. 1 second, y'all. Okay, great. So now we see more details, right? And the 4 hour is basically where I'm looking at potential places to get into an entry, right? I don't enter on the 4 hour, I enter on the 1 hour, and I can get a little bit more granular and get into the 30-minute and 15-minute, but sometimes it's just not necessary, right? So again, now that we're on the 4 hour time frame and I see price closing right here, right below this area of support, now I want to get more granular and look for that retest, because once price breaks a certain area, right, breaks a zone, now we want to start paying attention for that break and retest, right? So the break and retest was this, boom, retest, and then the bearish engulfing forms. So you get into the entry right here, you put your stop loss right there, and now you have a high probability trade. All right, so the next setup that I want to show you guys is basically areas where price can reverse. So this looks like a good setup right here. Price is essentially consolidating. Let's zoom out actually to the 4 hour. Okay, so we have basically price right here consolidating. Okay, so this area right here, there's consolidating. You know, this is the 4 hour time frame. So we have 1 candle, 2, 3, 4. So it consolidated for about 16 hours. Okay. And when I see consolidation, that gets me excited because price is having a hard time breaking above this resistance, right? We're not seeing a break and retest. We're seeing consolidation. So now that I see consolidation on a higher time frame, let's get more granular and look for that bearish engulfing pattern that I just showed you. Again, let's go ahead and zoom in on it, right? And then we want to look for this right here, the bearish engulfing, right? So if we're bearish, you want the bearish candle to basically engulf the last bullish candle and vice versa, right? If we see a reversal pattern for a reversal to the upside, we want the bullish candle to engulf the bearish candle, the previous bearish candle. So in this case, what do we see? We do see the bearish candle, right? But we are still above the 50 EMA, right? So on the 1 hour, technically this would be bullish because of the EMA, the 50 EMA on the 1 hour time frame. But again, I'm paying attention to the overall direction on the higher time frames. So let's go ahead and find that confirmation. Again, it's above the 50 EMA, but it's giving me a sign that this is going to reverse, right? And so do I want to get into this trade? Yes, but I want to pay attention to all of the confirmations, all of the confluences before I get into this trade. So I don't know price is going to go all the way down because of what's happening. So I need to confirm that price is going to continue going down. And once I see that the EMA is essentially another confirmation, I'll get into it. So now price is down here. Let's go ahead and get more granular. Oops, get rid of that. And let's go back to where price was. Okay, so now price is here and it broke that 50 EMA. So price is super bearish, comes all the way down here. It retests on that 50 EMA. And then what do we see? We see the next candle engulfing. Let me zoom in on it. We see the next candle engulfing the previous candle, right? So once this candle closes, the candle closes right around here. This is where the candle closes. So I'm going to get into a short right there. And then I would put my stop loss above the 50 EMA. This is an area of exhaustion. So I'll put the stop loss above the wick. Give it a little bit more wiggle room because of spread sometimes. And then I'll take it to the next area of interest on that 1 hour time frame, right? And so now we're not we're not playing zone to zone because we didn't draw that zone up. So now I want to find 3 areas where price bounced. So in this case, I see a lot of price hanging around right here, right there. So I would put my TP right down here, and this would be a 1 to 3 risk reward setup. So guys, oh my gosh, I messed up again. Oh my gosh. All right, so my bad. Let's go back to where I was. Jeez. Okay. Sorry about that. Okay, cool. So again, even though we were at the absolute resistance area and we saw that bearish engulfing, we saw the 50 EMA still giving us that confirmation that price is overall bullish, because price could have done this. Price could have respected the EMA. We didn't know price was going to continue to go down. We could have saw higher highs forming, and then we could have saw that break, retest, and then continuation. So quick little psychology thing for you. Our brain is wired to be right because we want to survive. And that's how we have progressed to have all this technology, because we want to be right. If we're wrong, we die, basically, right? That's what our brain is telling us. And so we have confirmation biases a lot of the times because we are programmed to say, this is what it's going to do. It's going to do this, and it's for sure going to go this way. But that's going to hinder you in day trading because we cannot predict the outcome of price going up or down. We can only predict in probabilities, right? And so you have to get into the mind frame of probabilities versus right or wrong. So if that makes sense, cool. If it doesn't, basically our brains want to be right all the time, and you're not going to be right all the time in day trading, obviously. So the more confirmations you have, right, on your charts, the more you're going to be able to be right more of the times. You're not going to be right 100% of the time. And so when you see price coming up and consolidating on this resistance area, yeah, I was like, hey, this is a great opportunity. Let me show you this awesome reversal, right? Like we saw price coming down. And so we could have, right, hypothetically made some really good money if we put our stop loss here, took it to the next low. But again, that's our mind saying, hey, this is for sure going to go down because it's consolidating on that resistance. Does that make sense? So we need more confirmations, and the 50 EMA gives us that extra oomph of emphasis to say, hey, for sure, this 50 EMA is telling us that now price has reversed to the downside. It's respected and retested this area. So let's go ahead and continue to go down to this area right here. And so, yeah, we have the break-in retests. We use the 50 EMA. And then we also use certain patterns to understand if price is going to reverse, right? So, you know, the drop-based rally. We also have rally-based rally. And I haven't even shown you that yet. So let me try to find you an example of a rally-based rally. Rally-based rally is a pretty strong confirmation. I don't really use it too much because it's basically a continuation play, and I like to get into entries based off of zones, right, or a break of a zone. So I'm waiting for that retest, and then I'm getting into a specific trade. But a rally-based rally is basically, I'll just draw right here for you. Here, I'll just show you on here. So the rally-based rally looks like this. We have strong impulse to the upside, a short little consolidation, and then continuation, right? And I can't really find one right now. Yeah, I can't find anything. But again, if we go over here, rally-based rally, we have impulse, consolidation, very short consolidation, right? So it looks like just flat, and then continuation. Same thing for drop-based drop. But yeah, that's all I got, guys. Hopefully you guys got some value out of this. I know I had some ums and ahs a lot, but again, I wanted to keep this raw. I wanted to show you the charts raw. And you know, UJ is basically a very technical currency pair. And if you understand multi-time frame analysis, identifying key support and resistance levels, using candlestick patterns to identify areas to get into an entry, and then using that EMA, right, to understand the overall direction, really paying attention to the 4-hour time frame to understand the trend, right? And then just confirming, basically going more granular on that 1-hour time frame to find another pattern, right, to confirm your entry, and then you should be good. Yeah, so that's all I got. Hopefully you guys enjoyed this video. If you want to join a free Discord group, there's no upsells. It's absolutely free right now. We just trade live. We have Sunday market breakdowns, and it's a very positive environment. So go ahead and click on that link in the description below, and I'll see you in the Discord group. Peace.